to Tableside Talk. My name is Cam Kelly. I'm a commercial real estate broker with the Langert Commercial Group.
And I'm Evan Langert. I am the principal, founder, and president of the Langert Commercial Group. We are a full-service commercial real estate brokerage here in Maryland. We serve also DC and Northern Virginia. And I have 35 plus years of commercial real estate experience, the last 15 in brokerage. But prior to that, I was the head transactional attorney for a publicly traded REIT for the eastern half of the United States, and spent several additional years with other large landlords, property owners. So we're doing these tableside talks so that I could take some of the experiences, the knowledge that I've gained over 3.5 decades, and share some of it with you in a frame that might benefit you with whatever your transactional needs are at the time, or whatever information you might need to build your knowledge of commercial real estate. And with that being said, Cam, what's our topic today?
So, Evan, today we're discussing ways that someone could finance a commercial real estate deal outside of a conventional bank. As I'm sure you know, money's getting tight in some circumstances, and so I'm curious about ways that someone could finance a deal outside of those traditional lenders.
Very good. Yeah, that's a timely topic. I've been through several cycles over the years, and we are in one right now as we begin 2023, where lenders are pulling back. Some banks are not making certain types of commercial real estate loans at all, and others are pulling back, whereas maybe they would have lent 75% of the value of a property. Now maybe it's 60 or 50, depending on what it is, and some of the other terms may change. Interest rates are up a little bit, so some people that were going to get commercial loans to buy certain properties are not going to be able to do that anymore. If they needed that 75% loan and they can only get a 60% loan, they don't have that extra cash, they're not going to be able to buy the building. So first of all, this isn't lending, but just as an aside, cash is king in a day like this. Or a time like this. This is when the rich get richer, as they say, because the pool of buyers is smaller. So, and the properties are out there. People want to sell. If you can come in and pay all cash, you can usually get a pretty good deal on properties, historically speaking. And then for other people that want to compete, you can either go for seller financing, which is what it says. It's asking the seller to be your bank, whether that means having them do the whole mortgage instead, or deed of trust, instead of having a bank do it, or whether that means I can only get a 60% loan instead of 75%. Seller, I want you to take back a second deed of trust or mortgage on the remaining 15%. So there's some of that. A lot of sellers don't want to do seller financing. However, in circumstances like these, sometimes if you want to sell your property, you have to, if you really want to sell it, especially at a good price. Others look at it and they say, well, you know, I think I might like to do that. There's some benefits. If you have a property that you bought for $3 million and you're selling it for $6 million, if you're not going to 1031 exchange into another property, you would have to pay capital gains taxes on the $3 million gain. If you don't get the whole $6 million, but somebody pays a portion of that, $1.5 million, $2 million, $3 million, and then you loan the rest, you're not getting all of that income at the same time. So you can forestall taxes to a certain extent. I would urge you to talk with your CPA about that. I am not one, and I speak only in general terms. But they can do that, and they can also say, well, look, bank interest rates aren't very good, and other investments, I don't really want to go into the stock market, but I don't want my cash just sitting there. I'm tired of the real estate. I don't want the management headaches, or I don't need this property anymore. But if I can get a certain return on this loan, it makes sense for me to do it. So I've had certain people in certain tax situations say, you know what, I think I'd like to take back a loan at a certain percentage rate of interest and make that my investment. So it's of interest to some sellers to do that. The other avenue is what's called hard money. You may or may not have heard of it. And what it is banks lend based on perceived risk. So, and they lend at a certain percentage rate, and they lend with a certain amount of points sometimes. And so when they won't lend, then the risk on those loans is perceived as higher. So hard money lenders step in, and they can be individuals, they can be groups of investors, they can be entities that were formed for this type of thing, and they'll come in and they say, well, we'll lend on it, but we're going to require a higher interest rate, and we're going to get a couple of points, maybe more, maybe less, for our efforts. So it's just money that typically costs more, but you might look at it and say, well, I know this is a great building. If I can get this now, I'm sure I can make the payments for the hard money loan on whatever other payments I have to make, and this is going to pan out for me. Then you might want or need hard money. It's an unfortunate name, hard money. To me, it kind of reminds me of loan sharking, but most of the play really isn't. I mean, sometimes I guess it might be in some circumstances, some places, but really it's just money. In my experience, it's a little more expensive than banks, sometimes more than a little more expensive, but nothing on the level of loan sharking from my experience. But those are two good ways if you want to pick up properties and you don't have cash. Otherwise, putting more equity together, doing syndications with other people that might have, maybe you don't have enough to buy the building, maybe someone else does, you can form a partnership, or in something larger you can do a syndication and come up with the money to buy one or more properties. A lot of people I know got rich during these periods when there's going to be lower priced commercial real estate by syndicating, by forming groups to go out there and buy when they couldn't do it by themselves. So that's another avenue, but they're limited. It's not like there's an unlimited number of ways that you can go out there and get someone to finance property. There's crowdfunding now. I don't know very much about it, but I suppose that's another avenue. But those are kind of the ways that you have.
Okay. Now, outside of strictly financing from that perspective, what would you say if somebody was considering leasing to own a property? Would you ever advise someone to go down that route?
A lot of people go down that route. The problem is usually more on the seller side, that they don't want to do that, because options are their options. By that I mean somebody gets the right to do something that you give them, but they don't have to do it, so you don't really get an obligation out of them. You don't really typically, more often than not, get anything out of it. You could charge for an option if the market so dictates, but for people who are buying, like, well, let me kind of feel this out. I'll be in the property for a while, leasing it. I don't have the money right now to buy anything, but I can occupy this thing and I can have the right before anybody else does to purchase this thing if I so desire, if my company gains income, which I think it's going to. I got a good product, a good service, and I think we're going to grow pretty quickly. We're in a good industry, and I think I'll be in a position to buy it in 1 or 2 or 3 or 5 years. Then it's a good way to go. Sometimes you can bargain where some of the rent that you pay goes toward the purchase price, sometimes not. That's a discussion for another time and in more particular situations. But yeah, it's viable and it's a good way to go for a number of buyers depending on what position they're in. Again, more often than not, way more often than not, sellers don't want to do that. But sometimes they have to. Sometimes there aren't other avenues. Sometimes they feel like it's a good way to go. They are getting income. Maybe the building's empty, but it's not anymore because you've got somebody there leasing it. So it does happen, certainly.
Okay, awesome. Well, thanks, Evan. That's good information.
Sure. So as always, when we're doing these tableside talks, we're speaking very generally. If you have a commercial real estate need or a situation, please do not take the advice that we've given here generically for any and every transaction. Give us a call. We don't charge for initial consultations.
Or confirmations.
Yeah, I almost said confrontations, but we don't do those anyway. But for initial consultations, we don't charge. We'll steer you in the right direction. We make ourselves easy to reach, and that information will be provided, pop up on the screen here. Have a good day.
Thank you.
Bye.